almost about 14 years now, a little over 14 years. And interesting story. People ask me about how I get started, and I don't like to spend a lot of time on myself, but I get a lot of questions about how I got started, how I became a full-time professional trader. And I had been trading for several years as a part-time trader, working a job. I worked for IT for years and years, and I was working for a cloud computing company. And the boss, I knew the boss. Boss was a good friend of mine. And anyway, back in about 14 years ago, 14 and a half years ago, just before Christmas, came across the company had some financial bad straits as far as cash flow was concerned. So he had to lay me off about 2 weeks before Christmas. So he did, and I decided that was a good time to start full-time trading while I was waiting to see what happened. And so December was an okay month, but January had a really good month full-time trading, and February started really, really well about halfway through the month. Very good month in February of that year as well. And it was then when my boss called me back and said that they had gotten the financial problem straightened out, and I could get back to work the following Monday. And he said, let's get started again. So I told him at that point in time, and again, he was a friend of mine, that I really appreciated the opportunity to come back to work, but I just could not afford to come back and work for him anymore. Trading was going too good, and I didn't see any reason to go back and take a job, a full-time job, when I could trade full-time myself and do much, much better. So it was an interesting story. That's how I got started. A lot of folks, when they go full-time, they have a plan. They plan out a couple of years in advance what kind of benchmarks they have to hit before they can become full-time traders. But no matter how you plan it out or get into it, I mean, I was kind of thrown into it, but I had been trading for a while. It's when you switch from a part-time when you have income to full-time when you don't have any income except your trading. It's quite a big wake-up call for you. So it takes a lot of discipline. And over the years, I've developed some nice strategies that we use in the room and on the alert service, and I'll cover some of those with everybody. All right, so we'll get started. Again, this is going to be my Compass options room and the alert service, and we're going to talk about basic options. We're going to go over the results we've had, etc. All right, so let's get started. And again, this will be recorded for anybody who has a question. If you can't stay through the whole thing or you're on here, you'll get a copy of it. All right, so this is just kind of a little graphic on the SPY super system, which I'm going to cover. That's a particular strategy we use inside the room on 5-minute candles on the SPYs, the Qs, and the IWM. It's been really killing it lately, but those results are not included in the results I show for the alert service of the room. They're separate, and I'll show you that. All right, so the first thing I have to do is I've got to do the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so I won't be giving financial advice. All right, if you have any questions, by the way, along the way, you can go ahead and put your name and number in the chat box or in the user box, in the question box, or your Skype username. And if I can't answer them, Rory will give you a call back to answer any questions that you might have anytime during the webinar. And he'll just call you once. He's not going to push you for anything. He's just going to call to answer those questions. Okay, so again, this is just kind of a SPY super system setup. These graphics here, I'm going to get into a lot of more detail on this. This is a system I use called the Compass option system, or the Compass system, which is a piece of software that runs on Thinkorswim or on Ninja. I run it on Thinkorswim. It's going to give us the indicators to let us know if the institutions are in the trade or they're not in the trade. And this is really, really critical. I'm going to talk about this multiple times. It's very important to know if the institutions are in the trade or not. That's going to determine whether you're going to be a winning trader or not. So we'll get into that and about how we find these kind of things. Again, I run it on Thinkorswim. I do not trade on Thinkorswim. You can have the Compass system on Thinkorswim or on Ninja. You don't have to trade on that platform. I trade on Tradier through a front end called TradeHawk because the commissions are so dirt cheap. But I do use Thinkorswim for the Compass system, and you'll see a bunch of those trades, a bunch of those setups. All right, and again, we have the alert service. It basically looks just like this. This is a graphic for the alert service. I send them out as soon as we take a high probability trade setup, always see what I send it out in the alert service. I'm on the alert service so I can judge how long it's taking to get there. Usually takes me about 10 to 15 seconds to get the alert once I send it out. And again, I take all these trades on my own account, my own live money account, and for both the alert service and in the room. So I'm not trading sim accounts. I'm trading just real money on my account. So if you're in a trade with me and you're down money, you can rest assured that I know that, because so am I. All right, so I do this every webinar. This is something that's really important, and it's critical to becoming a professional or even a winning retail trader, and that is to understand what's going on in the market and what drives the market. So what drives the market? These little marbles are retail traders like me and everybody in here, I'm assuming. So we're retail traders. It's critical to understand that when retail traders alone are trading a market, they cannot create a trend. They can't do anything except cause chop and chaos in the market. So we don't want to be trading when just the retail traders are in the room. This is the big marble here. These are the institutions, and the institutions are made up of investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America. All the big banks are part of the institutions. But you also have to remember that part of the institutions are also pension funds, huge pension funds with billions of dollars. Also hedge funds, hundreds and hundreds of hedge funds with billions of dollars. And then you also have your mutual funds. Vanguard, T. Rowe Price, all these big mutual funds. They're the folks that drive the market. And our job as retail traders is to determine when we're going to take a trade, whether the institutions are actually driving this trade or not. And one other comment about the institutions. Most investment banks and a lot of hedge funds now, they have algos, so basically computer programs that actually trade. And about 80% of the trade volume that goes through the market now is done by algos. And these algos programs that are written by these investment banks for the most part to basically look for trends. And one of the things they also do is they know what a lot of retail traders trade off of. In other words, they can identify a MACD crossover. If you're trading MACD, they can identify those, know what's happening, know that retail traders who use that are going to, if they're going to, lost my train of thought for a second. Oh yeah, the institutions on the algos, they can write a program to see if it's a strategy that retail traders are taking, and they can bust it. What they do is they take a MACD cross, they get into it like the retail traders are, just to make sure that it's confirmed, and then they reverse it and drive it down. But they can do this for any kind of strategy they want. They also read news optically. So if you ever wondered why when a jobs report comes out, a millimeter of a second after the job report comes out, the market's shooting up or down pretty fast. The reason that that's happening is they read the news and they look for keywords and key sentences, and they create trades off of that, and that's where that's coming from. There's no retail traders humans that are pushing buttons to trade that quickly. So that's all coming from there. So our job is to identify when the institutions are in there and when they're not, and we're going to trade with them. George, can we see the high net worth traders on the dark web? I'll show you what the Compass system is looking for. Anything that is getting any trades that go through, and I'm not talking about trades that haven't gone through yet, but trades that go through. There's 3 different things we look for, and we look for them across multiple time frames, and it'll show you how the Compass system identifies whether these institutions are in there, and it's really, really accurate. I mean, when it identifies institutions in a trade, they're going to be in that trade 95, 96, 97% of the time. You know, nothing's perfect, but this is about as close as you can get. Okay, so I have some rules that I trade by, a couple of rules to trade by, fairly basic rules. First thing is we trade the best and we skip the rest. Sounds easy, it's not. Obviously the best has to be, one of the criteria has to be the institutions are in there. And this other thing is, and this is our objective is not to make trades, our objective is to make money. And this is basically meant to reinforce the idea that you have to have patience to be a successful and profitable trader consistently. You have to have patience. So too many traders, if they get bored, haven't taken a trade for a couple hours, they're going to take a trade because they're bored. But again, you got to keep in mind, their objective is not to make trades, their objective to make money. So we only take the very high probability, most high probability trade setups that we can find. Those are the ones that we're going to take. Okay, now as a profitable trader, we need an edge over other retail traders. Now remember, you're not going to be taking any money from the institutions. When you're a trader, a retail trader, you're going to take your money from retail traders by knowing more than they do and having better information than they do. That's how we're not going to take them from these folks that are putting billions of dollars into the market. You're just not going to do it. But for retail traders, that's where we get our money from. So our edges that we have is we have the compass system, which I'm going to go over. This tells me whether the institutions are in a trade or not. This is really critical. We also trade relative strength and relative weakness. This is not RSI. Please don't confuse this with RSI. Relative strength is if the SPY on the 5-minute chart is moving sideways or down, and you have a stock that's moving up consistently with green candles, then you've got relative strength. That stock is stronger than the market. If it's vice versa, if it's weaker than the market, you want to take trades that got more strength in the SPY or more weakness in the SPY for the short side. And that's a huge edge, because if the market reverses on you, which it does a lot of times, if you're in a stock with relative strength and the SPY heads down, it's not going to fall as much as the SPY because it has relative strength to the SPY. And we also want to trade with the market trend if there is one. It's really important on 5 minutes and on daily charts. All my trades start with the daily chart. I have to have, if I'm going bullish, if I'm going long a stock, I have to have a daily chart that's long. It's got to be bullish. I'm not going to trade against the daily trend. And then we try to buy near support and sell near resistance, and this is important. Wait for the trade to come to you. In other words, don't get stuck with FOMO, fear of missing out. Don't be chasing stocks that are ripping higher or ripping lower. Many times you're going to get in long right at the top, and it's going to reverse. And if you just waited, it's going to pull back to a support or resistance level. They almost always do pull back. You're going to miss a few, but there's way too much risk for taking a trade early as it shoots up or shoots down. All right. So the compass system, what does it do? Well, the compass system, it identifies highest probability setups, while sidestepping setups that look good but will fail more often than they succeed. And this is very important, because it's always nice to find good trades. But I think that if you are able to bypass trades that look good but would fail, that's going to be even bigger help, not to be in losing trades. The compass system does this by identifying when the institutions are driving a move and when they're not. And this is what it's all about. This is exactly what it's telling us. Now, the compass software, it does analyze complex trading data. I mean, to get this information, you've got to look at a lot of complex trading data, but it displays it in easily identifiable visual format. And this is one of the big advantages of the compass system, that even a new trader can look at the compass system and they can see whether a stock is bullish or bearish and whether the institutions are in it or not. And that's really important, because the visual element makes it possible for even new traders to find high probability trade setups. And you see that when I show you some of these charts. If you've never seen the compass system before, and I show you the colors, you'll be able to tell me whether the stock is bullish, bearish, and whether the institutions are in it or not. So this is how we get an edge over the retail traders again. We take trades that are being driven by the institutions. We trade stocks that have relative strength or relative weakness to the SPYs or the Qs, and we trade in the direction of the overall market. These things right here, 99% of retail traders have no idea if the institutions are in the trade or not. Most retail traders don't even use relative strength or relative weakness. And then we trade in the overall direction of the market. A lot of retail traders do that. But these two things here, if you're doing these two things, then you're better than 99% of the other retail traders. And guess what? If you're better than them with the information you've got, you're going to beat them and you're going to take money from them. Again, so this gives us an edge, because our trades will be supported by institutional buying and selling. The stocks will be outperforming the SPY or the Qs, and they'll be moving in the direction of the overall market. Huge edge, huge edge. It sounds simple, but it's not. All right, so this is just, I do take only high probability trade setups. So this is kind of a probability trade setup funnel, I call it. This is virtual, of course. There's no such thing as a funnel that I use, but this is the thought process I go through to find a trade. First thing I do is I want the daily and the 5-minute chart to be aligned. So if I'm going to go long, first of all, I want the daily chart to be bullish. If it's not, I can't go long. If I want to go bearish, the daily chart's got to be bearish. I'm going to go short. And then I look at the 5-minute chart once I've determined that to try to find my best entry for that particular trade. You know, pull back to support and then a bounce and a confirmation of the bounce. We trade with the trend of this, both the stock and the market, if there is one. A lot of times, a lot of chop and there's no market trend, so you can't use that. The third thing is the compass indicators have to align. So once I've determined a stock I like long, for example, then the compass indicators have to tell me that the institutions are in that trade. If they are not, it doesn't become a prospect. If this fails, that stock is not going to fall through this funnel. It's eliminated. Then once that is met, then I look for stocks with relative strength and relative weakness. So this cuts down to the number of stocks that I can see. And then I want to enter near support or resistance. If most of these things, it doesn't necessarily have to be this one if it's choppy. But if everything else is true, stock drops out the bottom here, it becomes a good prospect for me. Now, if I'm not near support or resistance, but everything else is in place, I usually set an alert to take that trade. All right, so that's the high probability trade setup funnel. I have a video on all of these things. I have a trade funnel setup, video setup that you can video that you can view. I have videos on all of our strategies. This is just the funnel method. This is just written out, but again, you can see the 2 in green here. Stock to be traded should have daily and 5-minute chart aligned. Compass indicators must align in the direction of the trade. These 2 things right here are going to give you a huge edge over most retail traders. Just these 2 things. And then you have the relative strength and relative weakness. Now, on a 5-minute chart, when you're trading off a 5-minute chart, once you're looking to do a trade, stock price should be above the VWAP for long and below the VWAP for short. The VWAP is called the volume weighted average price. It's an indicator that you can put in your chart, and you'll see it on my compass charts. And it's really important. It's really critical. It's a level we use for our SPY super system. It's a level you should always be using. And if you're going to go long a stock, and on the 5-minute chart, it's below the VWAP, don't go long until it moves up through the VWAP, and then it's confirmed that it's going to go through the VWAP. That's a good entry place. All right, so that's most of those rules. We just covered all this before, but again, have patience is the key thing. It's really important to have patience. Most traders just cannot have enough patience to trade. They don't want to sit there and not make trades. They get antsy. You need to get up and walk away. Don't be taking trades that you don't have a high probability in, because you're not going to make enough money on it. You're going to have some winners, you're going to have some losers. Basically, you're just going to get chopped to death. Okay, so in the room and the alert service, just want to kind of quickly cover the strategies that we use in the room and on the alert service. We do a lot of straight calls and puts. This is the majority of the trades, probably 65, 70, 75% of the trades, depending on what the market's doing. I also use debit spreads using weekly options expiration. I have a video on this as well. This is, most people don't do this. Most people, when they do debit spreads, they go out 2-3 weeks into the future. Debit spreads using this current week's expirations are much more effective, much more profitable, have a much higher ROI. And I know this because I tested it for 2 years and found some interesting results from it. And that's what maybe create this particular strategy. I do what's called time spreads over earnings. Now, this is something we do over earnings. Earnings coming up now. They just started Friday. We're going into heavy earnings season now, so I'll be doing a lot of time spreads. Actually, what's called a calendar spread. And these are non-directional trades. We don't care if the stock goes up or the stock goes down. We're just trying to capture the volatility crush, which is the additional premium that's added to the option prices because the market makers don't know before earnings which way the stock's going to go and how far it's going to go. We take advantage of that by capturing this volatility crush. And again, I have a setup. I have a video on that as well. And then I use another thing called the weekly at the money or ATM strategy to capture premium week after week. This is basically a strategy where we sell premiums against a neutral to bullish stock week after week after week, while holding a longer term put further out in time below the price that we're in as a protection. So it does 2 things. It protects the trade from any kind of a pullback, and it also reduces our margin requirements. I mean, if you're selling naked puts, you have a high margin requirement on something like that. And then we also do credit spreads to capture premium. We just put a credit spread on yesterday on Crowd on CRWD. And the last one here is the SPY super system. Now, this is not alerted on because these are too quick, but these are very quick trades. We're basically looking for high probability trading setups on the SPY and the Qs or the IWM. And we call it the SPY super system. I call them in the room when I see them setting up, but it's most important for traders to learn to be able to do this themselves, because you have to be really nimble to get in and out of this. But I give you a really crystal clear criteria and setup criteria, and when to take them and when to get out of them in a video, and also we talk about it in the room all day long as far as these SPY super system trades are concerned. And they produce really, really well. And one of the reasons that I included this was because we don't take a lot of trades in the room. We've had 10 trades this month so far, all winners, but we've had 10 trades. But there's a lot of dead time where I'm just looking for trades, and other members of my room are posting trades they see as high probability trades, and I call them out and put up charts and answer questions all day long about that. But when we don't have any of those, we can be doing SPY super system trades to make money while we're waiting for good trades to set up. And this has been, I'll show you the results on this. It's really, really been exceptional. All right, so just a kind of a quick recap on the options alert service. It's designed for day trades and short-term swing trades. Most of the alert trades are going to be out that day, but most of the time they're overnight. But some will be into the day and out that day. 3 hours, 4 hours, maybe 5 hours. Typically, anything I alert on it, I got to expect to be in the trade for at least a couple hours to give all the alert members time to get in. It's designed for traders who can't watch or don't want to watch the market all day. It's going to you have real-time alert on the highest probability trade setup. So when we take a high probability trade setup, you're going to get an alert on it, and you're going to get two alerts. You're going to get an alert to tell you what to get in, and you get an alert to tell you when to get out. There'll usually be two separate alerts for that. And again, we take the highest probability trades by identifying institutional involvement. Again, this is the key. I also take into consideration market internals, which is the volume of stocks going up versus the volume of stocks going down, to find out if you're bullish or bearish. And then I do technical analysis on the stocks that become prospects. All right, so that's what we do in the room. This is my equity curve for the alerts. This was from March of 23 to June of 24, but it's really, really consistent. Most of the months fall within a pretty good range, and typically you'll find that you're going to have very consistent. Basically, equity curve is going to go from bottom left to top right. This is based on, by the way, on $2,000 per trade, putting $2,000 into each trade over that period of time. All right, so before I go any further, I want to talk about options, because I know a lot of people came to hear about options. So I want to get this done early in the webinar before we get into some results and things like that. So we're going to talk about options. So, and I of course, I don't know what everybody's experience is, but I'm going to do some stuff here that's pretty basic. I'm going to cover some stuff that's pretty basic. So if this is basic to you, don't worry. We have other people who don't know much about options. This is an option chain for Bristol Myers. This isn't back from, I think, from March when I did this, but basically this is what an option chain looks like. And there's two sides to it. This is the calls, and this is the puts. Calls on the left, puts on the right. Right? Then you have across the top here, we have, these are expiration dates when these options expire. You notice that these are weekly from Bristol Myers. Some stocks have weekly expirations. A lot of stocks have only monthly expirations. And then there are stocks that have daily expirations, like the SPY, the Qs, the IWM. Most of those have what's called 0 DTE, or 0 days till expiration. There'll be a date up here for every single day. So each option is based on how many expiration dates they are. But anyway, in this particular case, this is the expiration date here. This other thing that's very critical here is this is the strike price. So when you buy or you buy a call or you buy a put, you're buying a strike price. You're buying a price for the stock, and you're telling you're buying when it's going to expire. So these would be, for example, March 15th. If I look here at the $54 calls on this side, now these are calls. This is a $54 call on Bristol Myers. Notice that Bristol Myers is trading at $53.79, right? So the closest to that price is the 54. So these would be considered at the money. These are at the money calls. Now, what you see on the option chain here is this is the bid price, 61 cents. This is the ask price, 66 cents. Now remember, these are multiplied by 100 because that's one share of the stock. This is for 100 shares. So this would be $61 to $66. So if you wanted to buy this, you were likely going to have to pay somewhere in the neighborhood of about 64 cents, somewhere in the mid range. But this is bid, this is ask. All right, so this is what you'll be looking for. Now, if you notice, as you go into lower strike prices, like for example, it's trading at $53.79. If you take a $53 call, which is in the money, right? The stock is already above that price. You notice that the premiums go up quite a bit. It's much more expensive because you've already got $1 worth of value in that option. $1 of that $1.17 is because the stock is above that price already. So this is in the money calls. This is out of the money calls. These are strike prices higher than the stock price. Stock price is low. The strike price lower than the stock price. And it's just the opposite on the puts. Now, the other thing in here that's pretty important is this thing called delta. Now, if you look here at 54, at the money calls, the delta here is 52, right? It's 52 delta. And notice the put on the other side is 48 delta. You notice that these add up to 100, 52 and 48. What the delta means is how much the stock price moves, how much the option price moves relative to $1 price in the stock. So if the Bristol Myers goes from $53.79 to $54.79, it's going to move $1. Your option is going to move 52 cents. So that delta tells you how much the stock moves relative to the stock price move. Right, so that's important. The delta is important, and we'll get into these. I only use in the money options, puts and calls. I never use out of the money option puts and calls. It's a losing strategy. A lot of new traders do that. You're going to lose a lot of money doing that. They just don't work. So you got to take some in the money calls. Now, one other thing in here, I got another option chain here. Again, same thing. Bristol Myers 54. Here's a 61 by 66 cents on the call side. But what I've put in here is open interest in volume. And these are kind of reversed, but this if we look at the $54 calls here, we see 643. That's how many contracts have been bought or sold on Bristol Myers today at that strike price, 643. 1,004, that's the open interest, and that's how many option contracts were open at the beginning of the day. And this is only updates at the beginning of the day. This does not include the 643. Right, so this tells you how much open interest it is. This tells you how many contracts have been bought or sold on it. And it's kind of important because if you're trying to get into a trade or get out of a trade, trading options, if the more option open interest you've got, and the more contracts that have been bought or sold, the easier it is to get in and get out. You'll notice that the spreads are 61 by 66. That's fairly tight. That's because it has a lot of volume in it. If you get options that have really, really low volume, which you call illiquid, a lot of times your spread could be 61 cents by 91 cents. And you might have 10 contracts. So it's much more difficult to get into those because the market makers are protecting themselves by spreading it out. All right, so that's an option chain. That's the basic stuff. You got to remember expiration dates. You got to remember strike prices. And delta is important as well. All right, so we're going to talk here about what are options, what they are. What makes up option premiums? This is important to know this. One of the things that makes up option premiums is intrinsic value and extrinsic value. We're going to talk about what those are. We're going to talk a little bit about the Greeks. I'm not going to talk a lot about the Greeks. We're going to talk a little bit about the Greeks. And then we're going to strike price and expiration date, which we've already talked about. Volume and open interest, we've already talked about. And then the primary option trades that we use in the room and on the alert service. All right, so I'm also going to give you a breakdown on if you're bullish to stock, what are the option strategies you can use for bullishness? If you're bearish on the stock, what are the option strategies you can use for bearishness? And if you're neutral on a stock, what are the option criteria? What's the option potential you get? In other words, what trades can you take that are neutral option strategies? And then we'll talk a little bit about the trade setups. I'm not going to go into a lot of deep on this. I have videos on all of that. Okay, so this is what are options. Now, options are what's called a derivative of a stock. So you have calls and puts, and you can buy them or you can sell them. Now, this thing here we're going to talk about briefly is rights and obligations. It's kind of important to understand. When you buy a call or you buy a put at a certain strike price, you have the right to buy that stock at that strike price, buy or sell it if you're doing a put. But you have the right to buy it or sell it at that strike price anytime up to and including expiration date. You have the right to do it. You don't have to do it. Most people never do. We buy a call. If it goes up in price, we sell the call. We make money. But you have the right to buy the stock. Now, when you're selling a call or selling a put, this is where it changes to obligation, right? Remember, you're selling that call to somebody else. So somebody else is buying it from you. That person has the right, to buy that stock at a certain price. When you're selling it, you are now obligated to give that stock, or come up with that stock and give it to that other person at that strike price. So you're obligated to do this. This is where assignment comes in. You can be assigned as if you're short a call, which you should never be short a call by itself without a spread. When you're short a call and the stock price goes up well above your call price, and if you shorted it, the person who bought it can now demand that you give them that stock at the strike price that you sold the call at, which would be way below where the stock price is now, which means it's going to cost you a lot of money to go out and buy that stock at that price and give it to that person. So you can lose a lot of money like that. But just remember, you are obligated, and that's where assignment comes in. So again, you can buy or sell. When you buy, you're either long a call or long a put. That's what the terminology is. You're buying a call, you're buying a put. You're long that call or long that put. If you're buying a call, obviously you're bullish, and if you're buying a put, you're bearish. When you sell, you're a short a call or short a put. That's how you describe it. All right. When you're buying a call, you're long a call, it's bullish. When you're selling a call, you're short the call, that's bearish, and never should do this unless you're in the spread. Should never be selling calls naked. What's called selling them naked. When you're buying a put, it's bearish. You're bearish on the stock. And when you sell a put, you're bullish on the stock. Again, this should only be used, selling naked put should only be used if you want to own that stock at a lower price. That's what's called a cash secured put. That's how you can accumulate stock at a lower price by selling puts on it, looking for it at some point in time to go down and collect premium while you wait. But those are options, and these are the keys. Anything you do with options are made up of buying or selling puts and calls. So what makes up an option premium price? Now, when you look at the premium price, we saw that 61 cents on Bristol Myers. The premium price is made up of, well, first let me cover this. Options can be at the money, as we've mentioned this before. If the stock's trading at 55 and the at the money option is the 55 call and the 55 put. You can be in the money. So if the stock's trading at 55, then anything below 55 is an in the money call. And then they can be out of the money. So if the stock's trading at 55, if you buy a 60 call, that's out of the money. The stock hasn't gotten there yet. All right, so that's what at the money, in the money, and out of the money, that's what they mean. Now, the option premium price itself is made up of the stock price, obviously. Then we call what's called intrinsic value. That's the same thing as the stock price. The stock price, if you buy a $100 call on Microsoft and the stock's trading at 100, right? You don't have any intrinsic value. It's exactly zero. Stock, so you're paying exactly at the money. But if you buy a $95 call on Microsoft when Microsoft's trading at 100, then you have $5 worth of value in that option premium right away, because your option call, the call on the 55 on the 95 call is $5 less than the stock price, which means the stock price is $5 higher. So you've already got $5 of value in it. So that's called the intrinsic value. Now, the market makers will jack that up. You're not going to pay for a $95 Microsoft call when the stock's trading at 100. You're not going to pay $5 for it. You're going to pay $5 plus you're going to pay for implied volatility, which is a premium that's added to the option price because of the volatility, how much that stock moves typically. And then you're going to pay for time decay, and that's how much time until your expiration date occurs. And the further up in time you go, the more time decay there's going to be. So that's what makes up the actual price itself. So if you bought a $95 call from Microsoft when it's trading at 100, you're going to pay $5 plus the implied volatility plus the time decay. You might pay $625, $650, depending on how soon your expiration date is. So that's what makes up the option price itself. Now, we just covered this, the intrinsic versus extrinsic. So if you buy an in-the-money call, in other words, a $50 option, a stock trading at 55, is kind of like we said before, it has an intrinsic value of 5. Now, if you're paying $6 for that option price, let's say you pay $6 for it, then the difference between the $5 intrinsic value and the $6 you pay for it is called the extrinsic value. And you don't want to have a lot of extrinsic value, because extrinsic value, which is basically nothing but time decay and volatility, that's what's going to lose value very quickly over time if the stock is not moving in your direction. The time decay will bleed it down, and the volatility changes will cut it down. So that's why you don't want to have a huge amount of extrinsic value in the option you take. Now, keep in mind, I said you don't want to trade out of the money options. So if you had a stock that was trading at 55 and you bought a $60 call on this thing, it's going to be really cheap. You might only pay 95 cents or $1 for it. All right, but remember, if it's already at 60, the stock has no intrinsic value at all because it's out of the money. So that means all of the premium that you just paid for that option is made up of time decay and volatility. So those two things are going to go down in value very, very quickly. So if that stock moves sideways for 3 days, if you paid 95 cents for that thing, you're probably lucky to get 40 cents for it because it's drained out so much time decay and so much implied volatility. All right, so that's why we take in the money calls and in the money puts. The Greeks, we talked a little bit about delta. Delta is how much the option price moves in relationship to a stock price move. So if a stock moves $1, delta of 50 means it's going to go up 50 cents. And that would be basically a delta of 50 would be right at the money, right? So if you go out of the money, the delta is going to be much lower. So the lower the delta, the less the stock moves, the less the option moves in relative to the strike price, to the option price. So if the option goes up $1 and you've got a $30 delta on it, it's only going to move 30 cents. All right, so that's what delta is. Theta is time decay, and that is the decrease in the value of the option price as expiration date approaches. Now these are not linear decays. Decay starts slowly the further you are away from expiration and accelerates as it gets closer to expiration. So much more time decay comes out of it as you get closer and closer to the expiration date. So that's really important to understand. And then gamma, which is basically the rate and change of delta. This is really occurs when the stock is moving up or down really quickly. The gamma is what will move the delta. It can move from 50 to 60 if it's got a high gamma, and from 50 to 52 if it has a low gamma. So that's that can change it dramatically, the small change in the stock if the gamma is high. And so those are the 3 Greeks I'm going to just cover. So primary option strategies that are out there, and we don't use all of these, long puts, calls, and puts. This is what most everybody understands. A put credit spread or a call credit spread. This basically brings premium into your account when you create a credit spread for a put or a call. And again, I have a video on all of these things. Put debit spreads and call debit spreads. These are, you pay debits for it, you don't collect premium, but it's cheaper than doing a long put or a long call because you've created a spread. And then calendar spreads, which are time spreads that I've talked about that we use for earnings. These are non-directional trades. There are things called condors, which I do not use. They call them iron condors. And those are basically put credit spreads and call credit spreads that are basically on the same stock. You're looking for stock to stay in a range. I don't like them. They can have high win rates. 95% win rates because you're out of the money on both sides, a long way out of the money, but you're not collecting enough premium to overcome the one bad trade that might occur every couple of months and wipe out all the premium that you've made. And there's a thing called a butterfly, which I do, but I don't really call these out in the room. And then strangles and strangles, straddles and strangles, which we use. These are non-directional trades. Straddles and strangles are non-directional. A condor is non-directional as well. And again, calendar spreads are non-directional. Everything else is a directional trade. And this kind of just recaps that. For the bullish option strategies, excuse me, you can be long calls. You can use short puts, not suggested. Put credit spreads or call debit spreads. These are all bullish strategies. So if you like a stock long, these are the strategies you can choose from. For bearish stocks, you can be long puts. Short calls, never do this. Please don't sell naked calls. Sell calls without being in a spread. This is a disaster waiting to happen. Just so you know, if you sell a call, let's say you like Microsoft, and you don't think it's going to get to 110 in the next 2 weeks, so you sell a $110 call against it to collect premium. It's out of the money. You're thinking Microsoft can't get to 110 in 2 weeks. I'll just sell the call and I'll get some money. But if something happens overnight and there's some big announcement from Microsoft that's really, really bullish, and you wake up the next morning and the stock is at 150, and you're sitting there with $110 calls, you're going to have to give somebody the stock. You've committed to it. That's what the obligation was about. So you're going to have to go out and buy that stock for $150, and you can apply your short call to it at 110, but you just lost $40 a share on all of those calls, and you're basically, if you don't have enough premium in there, you can get a margin call. So just don't do that, please. Then you can do call credit spreads for a bearish option strategy, put debit spreads. These are all bearish strategies. And the neutral strategies are condors, straddles, strangles, and time spreads. These are all neutral strategies. Okay. I'm not going to spend a lot of time on this. These are this option strategy setups. Credit spreads, basically you sell a put and buy a put at a lower strike price and receive a credit. A call credit spread, you sell a call and buy a call at a higher strike price to receive a credit. And debit spreads, you buy a put and sell a put at a lower strike price for a debit. And a call debit spread is when you buy a call and sell a call at a higher strike price for a debit. So these are strategies that you can use. This is what the setup looks like. Calendar spreads, which we use time spreads in the room. We take a specific calendar spread. We take the current week's expiration and next week's expiration. 2 week different expiration dates, same strike price. And we sell this week's call and buy next week's call, same strike price, a week away. And we do that, we get it, it costs us money. And then after earnings comes out, we try to collect more money than what we paid for on time spreads. And most of the time we do. And the strangle, these are non-directional trade strangle. If you want to take a strangle on Microsoft, if Microsoft was trading at 100, you'd buy a $101 call, out of the money call, and a $99 put. Those are both out of the money, but it's a non-directional trade. So those are the only time you would be buying out of the money puts and calls if you were doing a strangle. If you're doing a straddle on Microsoft at 100, you're going to buy a $100 call and a $100 put. Basically, what you're looking for is a big enough move in either direction to offset the price of what you paid for those two options. So you're looking for a big move on a strangle or a straddle. You don't really care which way it's going to go. That's why I say they're neutral. All right, let me just get a sip of water here. I know it's a lot of material to cover, and again, I have videos and all these. All right, so when you are trading options, this is the criteria I use. I always use an in-the-money strike price. Why we need to do that. Expiration date, I go out at least 2 to 3 weeks, usually at least 3 weeks, even for a day trade. Even if I expect to take this trade in the morning and get out of it in the afternoon, I don't take an expiration date of this week. I go out 2 to 3 weeks, and the reason for that is if the stock starts to move sideways, I'm going to get a lot of time decay on current week's expiration. I'm not going to get much time decay on 3 weeks expiration, and it also allows me to stay in the trade overnight if I can't close it out today like I was expecting to. That's really important. And you can go out 4 weeks, 5 weeks, 6 weeks. You pay more for them, but the time decay is much slower. So I always use a delta of 65 to 75 on any options that I take. All right, so that's the setup I use. So I'm going to spend a little time here going over the results we've had in the trading room from since January. I'm not going to go over every trade here. I just kind of want you to look at the percentage gains that we get. It's important to understand that trading high probability trade setups, we're not going to get 2, 3, 4, 5, 600%. And you've probably gotten these emails from people telling you how much 200% you can make, 300%, 400%. You can't do that consistently enough to be profitable. It's just not going to happen. But basically, with what we're looking for is 10, 43, 37. You can see the percentage gains we get here. Very nice and consistent. We did have a nice one at Boeing at 96. We do get some 100% returns, but not that's not typical. Typically are 25 to 50. And we do have losses. So January we had 20 wins and 2 losses, 90% win rate, 2,000 invested at each trade, produced $7,500 in profit. Michael, you hope this is not too far off topic. Wanted to trade the intraday SPY Qs and IWM options to execute your intraday trading plan. Would you use zero DTE options that are deep in the money? What I use for the SPY Super System strategy, Michael, is I use zero DTE up until noontime, up until 12 o'clock or 12:30 on that day. And once it goes after lunchtime, because there's so little time left between there and expiration, I switch to the next days. So I go to 1 DTE after 12:30 and 1 o'clock. And I don't use deep in the money. I use one strike in the money, just one strike in the money on those, because I don't need to go that deep in the money. I'm not going to be holding these things. So I'm just trying to get rid of them that day as quickly as I can if I make a profit on it, but I don't want to get time decayed out if the stock goes sideways. So I will use one strike in the money, and I will go to switch to tomorrow's expiration after lunch. Okay. All right, so these are the January trades. Again, nice month in January. February was, I think this was our best month of the year so far. We had 24 wins and 2 losses, 92% win rate. I broke out the alerted trades. In February, we had 20 wins and 2 losses. Again, there's going to be less trades, or fewer trades in the alerted than there are in the room, because some of the trades I take in the room are going to be too quick to send out on alerts. None of this includes the SPY Super System, by the way. I'm going to show you those results separately. But again, the alerted trades had 20 wins, 2 losses, 6,930 in profit. Very good month in February. And you see the consistency here of what we're making on these things. We had a nice 80% in AMD, but most of the time we're talking about 20 to 40, 50%. That's normal. So this kind of just recaps 2023 using $2,000 a trade, 2,000 in each trade. In the Compass room, we produced a little over 60,000 in profit. And this just says we had an account of 50,000. When you started the year, 2,000 per trade would be about 4% of your account. Again, I have to use a baseline, so I just use 2,000. But the accounts grew from 50,000 to 110,000. So at the end of the year, you would have only been putting 2% in each trade if you use $2,000. All right, so the first quarter results of 2024, 65 and 11, 86% win rate in the room, 18,000 profit. The alert service, 41 wins, 6 losses, 87% win rate, 12.2 profits at 2,000 per trade. Second quarter, 65 and 14, 83% win rate, a little lower than what I usually do. 14,008, alert service, 35 and 6, 85% win rate, 11.7. So these are really nice profit, nice consistency on these things. Theo, do I scan to find these trades? Yeah, I scan. I have scanners in the Compass system. I also use TC2000. I have scanners in TC2000 where I find these trades. And frankly, I've got a lot of people in the room that are looking for high probability trades, and they have scanners, and they post them in the room to me, and we call them out. And a lot of times the trades I take are from call outs in the room, because we have so many good traders in there now that are following the same strategy. It's a big help to me and to everybody else. All right, so these are the May trades, just to kind of cut through that. Again, 15 and 2, we didn't have a lot of trades that month, but about almost 5,000 on the alerts. On the options room, about 5,700. 81% win rate. Again, a little bit lower, but still these are really nice profits. We did quite a few time spreads because we were in earnings season. We'll be getting a lot of time spreads in October now too, as we go forward. But again, you see the consistency in these profitability. That's what I want you to take away from this is you're looking for 25, 30, 35, 40, 45% on these trades. June trades, again, nice in the room, 25 and 4, 86% win rate, 75, 90. The alert trades, we only had 15 trades, 14 wins, 1 loss, 92% win rate, 8,300. We made more in the alert service than we did in the room in June. July, this was the room was 22 and 4, 85% win rate. The alerts, this was our lowest alerts of the year, 12 wins, 4 losses, 75% win rate, but still netted $3,300, which I mean is really pretty good for $2,000 in a trade. But that's that's pretty nice profit. This was a pretty nice profit here. Again, notice the percentages; they just don't change a lot. And August, this was so far, but we didn't trade. I didn't trade a lot in August, and September was really a hard month to trade. We took very few trades. October has really ramped up pretty nicely. But again, we did the 17 wins and 2 losses in the room, 89% win rate, 4,500, and alert service 2,400, 8 and 1. You know, a lot of the profitability, by the way, in the trades that you take is depending upon the market conditions. If the market's trending up and it's bearish, or trending down and it's bullish, I'm sorry, trending up and it's bullish, trending down and it's bearish, you can make more money because you can stay in the trades longer. When you get into really choppy trading, you know, gap ups and then sideways, gap downs and then sideways, it's tough. You have to take profits more quickly. So it cuts down in your profitability, but we still are only taking the highest probability trade setups. We just can't stay in them as long. All right, so just to kind of cover here, and I will say, as I said, this is where I left this off, but September, we had a profitable month of September, not hugely profitable, but a few thousand. But we didn't take a lot of trades. But October is ramped up really nicely. We're 10-0 in the room, 9-0 in the alert service. We haven't had a losing trade yet this month. So we've had a really, really strong month of October. And I'll get these probably out by the next webinar. Now, on the alert service, when you get an alert, it's going to show you the stock symbol. It's going to show you the option strike price, of course. It's going to show the expiration date that you should take, and it's going to show you the price to pay for the option. And that could say $1 to $1.05, something like that. But that's what you're going to get. And then that will be to get into the trade. And then you'll get another alert to exit the trade when we determine that. Sometimes it can come the same day. Sometimes it might not come for several days. I might be watching the price action to make a determination of how much how much profit can we take on this. But I'll always put out a sell order, and you should mark it as good till canceled when you put it in your trading platform so that it's going to be working whether you're there or not. Let's see, Richard, what's the maximum amount of capital needed to trade to achieve the results? The results I saw right here, if it's 2,000 a trade, most of the time, about the most number of trades we're going to have on at one time is 5 or 6 at the most. And a lot of those, there would be credit spreads, which are, you don't have to follow as closely, but I would say in that particular case, if you're going to be day trading, first of all, you need to have 25,000 in your account. You need to be above 25,000 to do more than 3 day trades in a week, in 5 days. So, you know, recommend that. But what I'm basing this on is like a $40,000 or $50,000 account. If you're going to put 2,000 into each trade, the most number of trades we have open, like I say, is 5. Most of the time it's 3 or 2, but it could be 5 or 6. So that would mean you'd need, if there was 6, you'd need about 12,000 in capital to have all those trades on. All right, so that's the alert service. Now I do want to cover quickly how we achieve these results, because I want to show you how the Compass system works, and I'll show you those with some live trades. But again, we achieve these results because we're able to identify when institutions are driving a trade and when they're not, and when the market internals are heavily bullish or bearish. This is a big, huge edge for us over all the other retail traders, because we know what the institutions are doing. So we only take trades when both of these are in our favor. That's really not completely true. I'll take a trade that the institutions are in if the market internals are neutral. I won't take it if I won't go long if the market internals are bearish. But as long as they're neutral or bullish, I'll take the trade. So this allows us to take trades that align with the institutions in the market. really a big edge, huge edge. So how does the compass system identify when the institutions are in the trade? And I get a lot of questions about this. We track 3 different things, and it's called a triple screen assessment. And this is basically what we're looking at is what's called we're looking at multi time frames. Some people call it fractal, but it's triple time frames that we're looking at. Now we look at 3 different things. We look at the momentum, and this is the most critical thing. We look at the momentum, and we look at momentum a little differently than some of the other systems do, but we're looking at the momentum on 3 different time frames. So if I'm looking at on a 5-minute chart, this compass system is looking at momentum on the 5, the 15, and the 45. If all of those 3 time frames are showing that that momentum is moving up, that doesn't just mean green candles is the way to determine momentum. But if that shows all 3 of those that got momentum, that usually means the institutions are doing it. Then we add the trend. If the trend is moving up in 3 different time frames, that gives us even more conviction. And if the money flow is moving up in 3 different time frames, that gives us more conviction. So if we've got these three things moving up across multiple time frames, whether we're looking at 5-minute charts or daily charts, then the likelihood that the institutions are pushing that trade up or down is well up into the upper 90 percentile. All right, so this, before we get into this, I just kind of want to show you the compass system. This is a stock on Tesla, a chart on Tesla. We're getting into some more details, but this is kind of what we look for. Now, these are the 4 indicators I was talking about. This is a long-term trend right here. Now, these are the 2 that I use the most. These are the ones I rely on. This is multiple time frame momentum. This is current time frame momentum. When they're green or blue, they're bullish. When they're red or yellow, they're bearish. Now, everything's green here. We'll see others where we get different colors, but these are the 4. Now, this is money flow. This is the one I use the least. These are the ones that I really focus on. And the current time frame momentum is the main one we use for the SPY super system. So you can see here, even for a novice trader, you look at this and you see green across the board, you know that the institutions are buying the heck out of Tesla on this particular time. This is the trade we took, by the way. And this little green line right here is called the 15 EMA of an EMA. It's a smooth 15 EMA. It's a support and resistance level. We have a few of these. We also get these pop symbols on the compass. These tell us, these pop out of the box. These tell us that compression is being broken to the upside. Each time we get a pink line here, right? And these little green dots are acceleration dots. They tell us that the current time frame momentum is pegged at the highest it can possibly be. So this is where we took this trade, but those are the indicators. I just wanted to show them to you all green so you can see what they look like. We'll get into plenty of the other colors here in a second. All right, so SPY super system. Let's talk about the SPY super system. And this is, again, this is not for everybody. This is for people who want to trade the indexes on an intraday basis. Like I use a 5-minute chart, but this is how it works. It's intraday trading the SPYs, the Qs, and the Russell 2000. Right. So these are results I've had. I've been doing this a long time, but I didn't start to quantify it till July because I never really introduced it into the room because we were just kind of focused on short-term swing trades. But then I had a lot of people saying, you know, I'd like to have more action. Let's face it. I want to have more trading action. So I said, okay, this is what I do during the day when I'm looking for trades. I'll look for these SPY super system trades. So in July, the last half of the month, I did 16 of these. Now this money is not included in those results I just showed you earlier. This is completely separate. So in July, we had 2,000 invested in each trade, did 16 trades, $2,500 profit. Some of these trades are pretty quick. You know, two candles, 3 candles. In August, I ramped it up. I did 56, 6 and 2, 56 wins, 6 losses, 2 scratches, 2,000 in each trade, produced 8,200. And September, 43 and 2. I mean, you can only take the trades when they set up. So we had 43 and 2, 2,000 invested, produced $7,100 profit. So this is typically what I'm looking for during the days. So you're going to get a lot of trades because sometimes you can get 5 of them in a day, but you're only got 1 trade on a time. See, this is the important thing. With the SPY super system, you only have 1 trade on at a time, and they're very short duration. So if you want to be in the room, but you can't be in there all the time, but you'd like to be able to take some trades, you come in the morning from 10 to 11, 10 to 11:30, you might find 1 or 2 SPY super system trades. You don't necessarily, but you could find a couple of trades then, a couple of trades in the afternoon. So while you're waiting for the alerts to come out on the trades that you're going to take that are going to be longer term, this is a way to generate some cash, and it's generating some pretty nice cash. The key thing with this is we get in right at, just as the stock breaks up through support on a long, that's where we're getting in. You got to get in there right there, because it keeps our losses to tiny. Typically, the losses on a SPY trade are going to be between 10 and 30 cents, and the gains are going to be usually between 10, 20 cents up to about 250. So it's a very high win ratio when it works, but it's important to get in there as it can support or resistance breaks. All right, so that's the SPY Super System. That's the results we've had with it. I'm going to show you a couple of SPY Super System trades here that we've taken. This was back in August when we started here. This is a SPY Super System trade. Now, these are the things, it looks busy. Okay, here's the compass system. Here's your multi-time frame momentum here, current time frame momentum here. For the SPY Super System, the only thing we're looking at is the current time frame momentum. For a long, this needs to be blue or green, and for short, it needs to be red or yellow. Really fairly simple. All right, so that's the current time frame momentum. Then this is the VWAP. This is the volume weighted average price that I mentioned. This is really critical. This is a support and resistance level. We want to go long when the stock price gets above that. So this is a trade we took on the SPY Super System trade here in 8-9, $220 a contract. That's a lot of money on one contract on buying SPY calls. And you can use this for futures, by the way. It works on futures the same way. So notice here, when he took this, you notice that the current time frame momentum, you see it went from red, which is institutions selling, to blue, institutions buying. Now the multi-time frame hasn't switched, but we're just interested in this for these quick trades. So we went from red selling to blue buying. We entered right there on the pop out of the box symbol, and we wrote it, and notice that we stayed in it. And once we get above the VWAP, now the 15 becomes our stop. We ride this 15 up, and we're getting pretty extended. So as soon as I start to see some momentum fail, like right here, some people could have get out right here. Some people, I get out right here and made $220 a contract in this. But you see how beautiful that is. And you notice that this stayed blue and green the whole way. Institutions are buying all the way across here. That's all we care about. So that's what we're looking at. We're looking at the 15, we're looking at the VWAP. That's all we need to look at. That's it. That's how the SPY Super System works. And we have to take into consideration what the market's doing that day. If it's a choppy market, then it's much more difficult because you don't really have any trend that you can follow. If you get a trend, it's great. If the SPY's going up all day in a trend and it pulls back to the VWAP and bounces up, you can really feel confident about that it's going back into the trend, and you can usually squeeze out more profits doing that. Right, so that's the SPY Super System trade right there. This was another one we did on 8/23. This was a short. All right, so here's the current time frame momentum right here. Notice right here, you see how it's yellow and then went to red, but it's breaking down below the VWAP. See the volume weighted average price? See how it's breaking below that? There's a little blue arrow right there, by the way, which is a pop out of the box. Energy level and trend up, I don't use either of these. So there's a breakdown right there. So this is where we get into it. And you notice it's moving sideways. Now this is staying red. So we know that the institutions are selling this. It's just not driving the price down yet. So we stay in it, we stay in it, stay in it. It's still red, 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 red. Our stop on this becomes the 15, right? Not the VWAP, becomes the 15 once we get below the 15. And it never closed above the 15. See, it popped up about it, came back again. Get up to it, came back. Then finally, based on all this selling, we finally get the flush to the downside. Now this white line is a pivot point. It's something I use for support and resistance level. So I had to be very cautious when I get to the pivot point. I had a sell order ready in case it bounced, but it didn't. It pulled back down again. So then we wrote it back down here. And here I get out right here as it starts to lose momentum, and $280 of profit per contract. Do you put a take profit? I'm not sure in what reference you're talking about that, Paula. But when you're trading the SPY Super System, I can tell you what I'm doing, but they're so quick that you've got to be able to manage those yourself. Now in the regular trades, yeah, I put a sell order out for sell order for the profit target. Any of the profits that we've taken, I put the sell order in the alert, and I post it in the room on a little yellow page sheet that tells us where the trades are. It tells you what we went in at and what we're getting out at. That we do take a put profit target in there, and then I don't use any stops. So once I've decided that the stock's broken down and gone against me, then I'll just put a sell order out at that point. But I'm not putting any real stops in there. I don't want to have stop trades working because the institutions can see those from the ECN. They can actually see when people have stop orders in, and I don't know if you've ever had a stop order in and had it get taken out by 2 pennies and then have the stock turn around and go back up again, but that's what happens. Matt, you're interested in the SPY super system only as you trade the SPY Q and IWM. Okay, it's the same trading room as separate. Trade these every day using futures as a hedge sometime. Yeah, no, it's the SPY super systems I talk about in the room. Now, I can call them out and tell them when they're set up, and these are set up, but typically most people are in the room, they have the compass system, or they look at the compass system that I have. I have the Thinkorswim chart up in my room all day long. With SPYs, Qs, IWM on there, that I switch back and forth, so you can always identifying those. Or if you want to do it yourself, you just get the compass system, put it on TOS, and trade them yourself. But I do call them out in the room. It's not a separate room. I do it inside the exact same room so that folks who don't use this all the time can also start to trade these. And I've had a lot of people that never traded these before and started trading them off this, and they're really happy about it. They're making a lot of money midday when they're waiting for other trades to take shape. All right, so again, this was the SPY super system here. There's another one here. Yeah, this was the IWM. IWM doesn't move as fast, but let's just look at the criteria. Current time frame momentum. Selling, selling, selling. Whoops, institutions just switched to buying here. What am I waiting for? It's just moving along. I'm waiting to see a break. This is a compression. Here's my compression break right here. As it's blue, compression break, above the VWAP, above the 15, I take it right here, and I ride this thing up. Now it's staying above the 15. See, the 15 becomes my stop. I just ride it up, the 15's switching up. Now I'm getting quite a bit of movement here. I got to be very cautious when I start moving this fast. As soon as I get some momentum starting to trail off, I take profits. And this still stayed green, but I'm out. I've taken the money right here. I'm done with the trade. $150 a contract on it. Oops. So these are some other ones I didn't put the actual details, but I just want, again, I'm trying to emphasize the setups. And we're going to get into some regular trades here in a second too, but these are all SPY super system trades. Right? Notice the red, notice the blue. I'm buying to selling. Do I buy right here? No, I don't. I'm waiting for this thing to break above the VWAP. So where am I going to get in this trade like this? Right here, as it breaks through the VWAP. That's where I'm going to take it. I wouldn't try to front run it. I'm coming off the 15. I wouldn't take it off the 15 because I had the pivot point here. I had the VWAP here. Too close to resistance. So I take it here and I ride it up for 4 candles and I get out. Again, notice it went blue and it stayed blue or green the whole time here. This is another one here. This is green the whole way. We had a couple of yellow shots in here, but once I get green and it's riding along the 15 to 15 in this particular case becomes my trade. All right, so I could buy it anyway from here, here, here. Any of these candles will work, and then you just ride it up. But it didn't move up very quickly, but it followed the 15 up pretty nicely, and then you exit right there. All right, and here's a SPY trade here. Nice little breakdown. See the VWAP, and we'll see how it's riding along the VWAP. We're already selling, so what we're waiting for here is we're waiting for a breakdown. You get a compression break right there. It moves down and reverses right here. 3 candles, that's it. You're in this. As soon as you get this green candle, you're out. Got a little tail on there, you're done. Not a huge trade, but still pretty nice trade. Here's another one here. I mean, if you're looking across this, there's really nothing here that's market isn't trending very much. But this right here, as it went from green to yellow, this was a potential breakdown here or here. This is where you would take it right here, most likely as a 15 breaks with a pop out of the box symbol, and you just write it down. As long as it stays below the 15, you stay in the trade. Boom, you're out right here. Another one here. So these are what they all look like. Again, you're looking at the current time frame momentum, bullish, green with red, blue for bullish. See how the stock is the VWAP here. You see how this has gone green, but I'm not getting in here. Just because it's above the 15, I'm not getting in because I got the VWAP right there. That's going to be resistance. Here it breaks through the VWAP. This is where I take the trade. It goes green. It's already green. Institutions are buying it. Buy it right here and then write it up. It's not a big trade, small trade. All right, so those are that's the SPY super system. It's the setups are different than what we look for regular trades, but they're very nice quick trades. Let's see, Robert, how much money is involved to buy one contract in the SPY? Well, I'm taking usually one strike in the money. It depends on whether it's today's trade, 0 DTE, or 1 DTE tomorrow. Typically, I pay for the options on the SPY somewhere between about $1.10 and about $2. So, you know, $100 to $210 usually per contract. Do you have the Compass system on Ninja? Ninja has a version of the Compass system called a money flow tracker. It tracks the same thing. It's presented differently because Ninja doesn't look the same as Thinkorswim, but they do have the money flow tracker, which is going to give you the same information on Ninja 8. 5-minute chart is ideal for a SPY trade. That's the one I use. A lot of people like to use 1 or 2 minute charts. I don't. I'm using the 5-minute charts. I've found that there's too much noise on the 1 minute charts for me. Too many likelihoods of getting shaken out. So the 5-minute has worked out best for me. That's the one I stick with. All right, so let's look at some regular charts here. I want to kind of go over the regular trades we've taken, and we'll go over the setups are a little bit more complex, of course. Ken, you're a lifetime member for futures trading. Cool, very good. Yep, I mean, you know, it works, like I said, on Ninja, and it works on Thinkorswim. I'm basically just trying to explain this strategy that I use. I have to have institutional information to be able to do this. I can't do it without it. Do we sell software or memberships? The software in the Compass system is you can buy. I'll go over that at the end. And you can get a membership in the room or the alert service. You get a membership in the room. I have the Compass system up all day long, so you can see it right there. But a lot of people like to have it for themselves. Okay, Matt, not sure if you want to get this off your trade and Thinkorswim. It might give you a trade room 90-day trial. Yeah, that's fine. Listen, if you come into the trade room, you're going to see the SPY super system trades because I have the Compass system up all day. So I'm looking at the SPYs, the Qs, the IWM, and I'm talking about what the market's doing. And so you're going to be able to see those. You'll be able to see those if you've been trading ETFs for a little over 20 years. Yeah, you know, come into the room, you'll see them. You know, you'll see the SPY super system, and you'll see the Compass software up there all day long. I mean, I just keep it up all day. Now I'm switching back and forth for stocks when I'm looking to buy a stock. You know, we took some stock in FOUR yesterday, FOUR. We're short Moderna right now, and we're long NVIDIA. So, you know, you're going to see those charts as we look for the setups. But I'm always looking for SPY super system trades all day long. All right, so these are some of the ones we've taken. This was Palantir that we took off. This was a pretty nice trade just a few days ago. We got these are for 10-8. We get 31 profit in 2 days. Now this is the Compass system where I'm looking at everything, right? So I'm looking for an entry in Palantir on the daily chart. You notice it's doing a lot of compression here, but right here, you see this thing. This was going from yellow, the current time frame momentum, which is on the daily, and this is the multi-time frame, which is on the 1 day, the 3 day, and the 9 day. This goes from yellow to blue, and then back to yellow. Now it goes to green. You see how we broke out of this compression right here? This is where we bought it. This is where we sold it. And 31% in 2 days on Palantir. That was a really nice trade. I don't use the VWAP on the daily, by the way, only on the 5-minute chart. Twilio, we just had this one also on 10-2, 58% profit in 2 days. Everything's green here, but we can't take it here when the multi-time frame momentum for swing type trades is switching back and forth. But here it went green. And this is where we get in right here, where it went green. And it was also coming out of this compression and breaking above the 15. We took it here, we get out here. That was good for 58% profit on Twilio. I mean, that was really, really a nice trade on Twilio. And another one we've had recently was CRM. This was also on 10-2. Entry right here. Notice that it went to, we actually took it right here as it went to green here, and then took it up off here. I think got the arrow in the wrong spot. But you can see that it's the 15s here. You can see it's compressing. See, this is the current time frame momentum's green the whole time. Bought it here, sold it here, and 29% profit in 2 days. And this is a little older one. This is Lulu. This was a put debit spread we did overnight on Lulu. We took 56% profit overnight. We took it short here. This was earnings to gap down. It's compressing. We like this breakdown right here on this candle, so we took it overnight. Get in for $1.92 on a debit spread, and got out for $3. 56% profits, pretty nice for an overnight debit spread trade. Workday, again, this was a daily chart. You can see we did 30% profit on this one to get in right here. Actually, we get in right here as this went blue. Then we had to watch it because this went yellow, but then it went back to blue again. And meanwhile, the current time frame momentum stayed blue. So we stayed in the trade. And we were in this trade for 5 days. We rode this thing up. We rode this thing up. It remained bullish. You notice it's bullish across the board. We're getting some flipping back and forth here, so you just have to be careful. As long as the current time frame stayed okay, I was all right with the stay in the trade, unless I saw some technical breakdown. The GCT, 2-day trade for 56%. Again, everything's green. Institutions are buying. We're looking for a break. See the compression, break right there, boom, we're in the trade, and then we're out 2 days later. MDT, another nice 25% profit on a swing trade. See how we went yellow to blue here? Everything else was green already. We wait for the institutions to do this on the current time frame, buy it here, and we took it out back up here. This is on a daily chart. Rode right along the 15. 25%, not a huge trade, but a nice trade. VKTX, also a nice trade here. 30%, this is a 30% was pretty good. We got in on the beginning of this candle as it broke above this little yellow here. We got into this candle and get out here, 30%. A lot of it depends on the volatility of the option prices, etc. McDonald's, this was an overnight trade. We had McDonald's in for 8.30, out for 11.30, 37% gain. Right here is this box right here, the shaded box, and I haven't covered all the Compass Systems indicators because there's so many, but this is what's called a dynamic compression zone that it broke out of. So we took it right here as it confirmed that it was out of there, and we just got this out of this overnight just like that. And everything's green. You can see the institutions are buying McDonald's. Amazon, same thing. This is a 5-minute chart. This was when we did intraday. It's compressing. This is kind of switching back and forth. Now everything goes green here. I don't worry too much about the long-term trend. I'm going to just take this as a day trade. I take it here as it breaks above the 15 with a pop out of the box. And I'm in this trade for 45 minutes and make 32% off of these options. Really nice. Again, these options were out 2 or 3 weeks, but we still made 30% to 32% on them. ENPH, a nice short. Again, you see the breakdown here. We're below the VWAP, and we've got the 15 coming down. It's compressing. I'm not touching it here during compression, but here I get a pop out of the box symbol right here. So I take this, and we were in this for 1 hour, and we made 20%, and everything's red. You can see that I was confident it was going to be a short. I just was waiting for my entry off of something that indicated it was going to break down. So that's what we took the NPH short, 20% in an hour. And Verizon, this was 50% in an hour. This, as it broke down below this VWAP right here, and I laugh at this because this was unbelievable because the Verizon options were really cheap. I went to next week and I paid 45 cents for an in-the-money option for Verizon because it doesn't move an awful lot. And we get in right here. And notice, look at the Compass System telling us the institutions are selling the heck out of this thing. So we take it here as it breaks below the VWAP, and we ride this thing for an hour. I get in for $45 a contract, and I get out in an hour later for $67 something a contract. From 450 for 10 contracts to 670 for 10 contracts. That's really a nice trade. And because most of the time Verizon doesn't move like this. But the Compass System told us the institutions were selling it, so we took it. We could have not got that much, but it worked beautifully. And again, I have to emphasize we have losers. I have about an 85 to 90% win rate, but so that means you're going to have 1 to 2 losses out of every 10 trades or so. All right, this was a SPY super system setup. This I did before I actually started quantifying the SPY super system to show folks what it looks like, but you can see it right here. Here's the VWAP, here's the 15, here's compression. It breaks down right here. You take it right here and you ride it down. And I probably would have got out right here. It went down here, but I probably would have got out on that candle. But look at the selling. Everything's red and yellow. Nice selling here. And this was a Tesla one we took overnight. Let me see, I have one more question here. Is it Discord? Yeah, we have Discord. We have a Discord room. I think Rory already answered that for you. Joseph, what's the difference between the signal B 13.31 and the 13.1? I think the signal B, I don't call it the signal B, I call it multi-time frame momentum. Signal B is like they call it on Ninja. It's a little different. You'd have to talk to probably Sergio to know exactly what the difference is. I just know that this is a signal B right here. This particular one. This is again, this is a multi-time frame, and this is current time frame. So I'm sure that's what it is as far as the time frames that it's looking at to do the calculations. Is the SPY super system different than the Compass system, Paula? The SPY super system is a methodology. The Compass system is a piece of software that identifies when institutions are in a trade. The SPY super system is a methodology that I developed to take advantage of the SPYs, Qs, and IWM, trading them on an intraday basis, using the Compass system to tell me if the institutions are taking the trade or not. So I use the Compass system as a guide to my SPY super system, but the SPY super system is a methodology, it's a strategy. All right, so this was a Tesla. This we took overnight. You notice we had everything red here, red and yellow. We took it this is right at the end of the day. We took some calls, some puts, and we got a break here. We had a flush down, a gap down overnight, went from 120 to 112. Huge profit in this trade. You know, $750 a contract on the options. Really nice trade. All right, so that covers the presentation. I covered a lot of stuff. I know there's probably a bunch of questions about these things, but I did want to just kind of go over again. These are the strategies that we use in the room: straight calls and puts, debit spreads, using weekly option expiration, the time spreads, non-directional trades, over earnings, which we're going to be starting to do this coming week, weekly ATM to collect premium every week, credit spreads, which actually collect premium every week as well, and then the SPY super system, which I've spent quite a bit of time on. And I didn't used to spend a lot of time on the SPY super system, but I've had so much interest in the SPY super system, and I think the results are probably one of the things that's driving people to take advantage of it, because if you're in the room, you can trade it right off of the chart that I've got up there, and while we're looking for other longer term trades. Okay. So the SPY system is different from the Compass system. Yes, I just talked about that. Okay. All right, so these are the offers that we have. We call them the fall special. For the alert service, you can do the quarterly for $396, that's 3 months, or you can do the annual for $992. If you want to be in the alert service for lifetime, $24.96, which is pretty cheap, but that'd be lifetime, save 50% on that. Now the alert service, if you take the alert service, you'll get a month free in the trading room. So you'll be in the room for a month, which means you also get the Discord chat. We have a Discord room with 2 other professional traders in there that post trades all day long, post charts. They cover sector information, they cover economic information, a lot of really good information. And then you'll get the Wyse way to trade options. This is my video library of about 30 different videos now on all the strategies we take. I've got a fairly long one in there on the SPY super system, but all the other things we take. I also have a video on the Compass indicators and how to use them to find the highest probability trade setups. And for the first 2 here, you're going to get a 2-week trial for free. So you might want to take advantage of that. This is the alert service. This is the trading room itself. What you get here is full year for $11.98. That's pretty cheap. Again, we made about 60,000 last year in the trading room. So to me, that seems like a pretty good investment. And monthly, $148. I don't think a month is long enough, but you can get in for a month if you want. These are what you would use for your coupon codes. And again, obviously you're going to be in the live trading room. You obviously get the Discord instant messaging as well. You also get the Wyse way to trade options, all those videos. You get access to those. And I do these periodically. I've put out quite a few. And the last thing is the actual Compass trading system. This is a software that produces the colors on the indicators. It has the VWAP and has all the information you need to trade the SPY super system. This is what you want, the Compass trading system. Again, full year for $14.98, lifetime for $19.98, and you get my workspace. In other words, when you get the Compass system, the tech folks at Rightline will put it on your machine. They'll actually go in there, take over your machine, log it in there, put it in there. They'll put it on your Thinkorswim platform. You don't have to trade on Thinkorswim, but you use Thinkorswim. They'll put it on your platform, and it'll look exactly like mine. You'll get a bunch of scanners that come with it as well. But again, you get a month in the live trading room if you buy the Compass system. And you can use this Compass system for regular trades. You can use it for the SPY super system. You really need to have it if you're going to trade the SPY super system yourself. But if you're in my room, you've got it right there on the screen all day long anyway, because I use it all the time. All right, so those are the three offers we've got: the Compass system, the trading room, and the options alert service, which is going to give you a 2-week trial for the first 10 for the alert service. All right, so those are the things I'll show you real quickly. Let me just take this down for a second. Let me just show you the Compass system. I want to show you the Compass. These are the some of the and by the way, Thinkorswim is under maintenance right now. But here's what the Compass system looks like. These are some scanners I have. They're not working right now because the system's Thinkorswim is down. But I have a cascading up scan, a cascading down scan, new yearly highs, new yearly lows. This is built into every one. But these are looking for stocks that have relative strength if the market's moving down, and relative weakness if the stock's moving up. And then I have a bunch of other scans that you get as well. So I wanted you to see those. And again, if you have any questions, put them in here. Rory will get back to you. So the trading room access service different from the options alert service. Yeah, it is. The alert service is separate from the room. If you're in the alert service, you can also get the Discord room, which is all the trades I take are posted in the Discord room as well. But the alert service and the room are different. The room is if you want to be in there, get the trades, but you always have access to Discord. In other words, if you're in the room but you don't have the alert service, you can still see the trades that are taken in the Discord room because you always have access to that. All right, so those are the offers that we have. And again, I appreciate everybody being here. I know it was a little bit long, but I did want to try to cover as much as I could. I think I did that and covered the options, and I appreciate everybody being here today. I hope you have a great weekend. Hope you enjoy yourself, and looking forward to see some folks in the room or on the alert service come Monday. So have a great weekend. We'll be looking for some more good trades again, like I said, in October so far, 10-0 in the trading room and 9-0 in the alert service. Not that right, we always have losses, but this has been a really good start to the month. So okay, so I appreciate everybody. And where's the page? Oh, if you go to the chat box here, I'm sorry, chat box has all the offers listed right there. You can click on there and use it, or you can go and call Rory. If you call Rory at 786-732-4656, he can take the order for you right there. Okay. All right, everybody. Thanks very much. Appreciate it, and look forward to seeing you in the room. Have a great weekend.